Welcome. So what we're going to be doing today is I'm going to give you guys some gems when it comes to your credit. Okay. This is going to be the start of a new series that I'm going to be trying to work on, just so that way, again, I can educate and promote how you handle your credit, because credit runs the world, right? It is what allows you to get cheaper interest rates. It is what allows you to getting to rent in places, having a credit card, which is mandatory for car rentals and hotel stays now. So as you can tell, it's very important to really understand what you're doing with your credit. Now, this segment, the one that I'm going to be working on today, this is going to be focusing on doing co-signing. Okay, so make sure you think before you co-sign. Okay, what does that mean? The number one thing that a lot of people don't understand is if they couldn't afford to do their own financing, what makes you think that they're going to remain vigilant when it comes to your name being put on it? A lot of people don't understand that when it comes to credit, right, that when you co-sign, you're putting your name on that loan. Now, the only time that could really have a bigger impact on you is because you're not realizing what you're signing up for. So let's kind of talk about it. Number one, the first thing first, kind of like what we mentioned, if that person does not have the financial capability or the credit score to finance it on their own, you need to understand why. Why is it that they can't finance the whole vehicle by themselves? Why is it that they can't, get a credit card by themselves or a personal loan by themselves, right? This is important because you need to understand why. Was it because they were late on their payments? Was it because, they can't afford it? These are a lot of things that you need to focus in on if you're going to put your name on somebody else's dotted line. Okay, especially if you're not the one that's going to be benefiting from the transaction. So co-signers, what they don't realize is, let's say Amy and John. Okay, so Amy needs John's credit history or credit score in order for her to get the auto loan, right? Because hers is not stable enough. It's a 540, okay? Let's say John's is a 681, okay? So there's a lot more credibility with John because we can see that his credit score is higher, okay? Your credit score definitely displays who you are as a person from a financial standpoint. So what happens is, because John didn't do any research with Amy to find out exactly why her credit was short or why there's, some discrepancies or why she couldn't get the loan by herself, they go ahead and co-sign. Now, this is where John can run into a problem. So let's say 2 years down the road, right? Co-sign, payments have been on time, everything's fine with the motion. But something happens to Amy and she can't work no more. Okay? So let's say Amy got hurt and she's been out of work for 3 months. That put her in the debt pit, is what I like to call it, because it's hard to crawl out of once you get in it. It's possible. It's not impossible to get out of the debt pit, but it's still a pain in the rear, right? So now that Amy is not paying her payments, guess what? Dropped even further. But now it affected John. John might have on-time payment history for over 2 years. Perfect, looking good, always on time, managing all of their money correctly. But because he co-signed and it's under his name as well, you're signing that you're liable for the debt if Amy doesn't pay for it. But guess what? Amy's not going to come and tell you that she didn't pay 5 months worth, is she? Or is he? Whoever. You put it where it fits. This is just an example, okay? So, again, Amy ain't going to tell John what's going on, right? Next thing you know, John wants to come and apply for his own vehicle. And he comes and his score has dropped down to 580 from a 680, right? Credibility went shot down right then, right, real quick, just because they shared a loan. This is where it's very, very important for you to understand before you co-sign. Think before you co-sign, because you got to realize you have to take on that debt if that person doesn't. And you need to be aware of how. Hold on, I'm sorry. Let me turn this down. Okay. And you need to be aware of what's going on with your accounts. Okay. Just because you co-sign and let it go, and then you have to go and apply to find out that that person wasn't doing their due diligence. Now that falls on you because you were still supposed to be responsible because you agreed to take over the debt in case Amy did it, right? But again, you won't know because Amy won't tell you. So I do offer some insight, okay, on how you can accomplish those goals if you do decide to co-sign. If you're interested in those type of conversations, please just, email me at the bottom or visit a link that I have provided in the description box down below. But let's continue. Let's go ahead and keep talking a little bit more. There's different scenarios. It's not saying you can't co-sign. It's just saying think before you do. Because again, a lot of people are showing you that because they can't do it on their own, there's a problem with that. They need to be aware of how they can handle if they can't handle their credit, then they can't handle the debt. Let me say that again. If they can't handle their credit, they can't handle the debt because they're not going to manage correctly. Okay? Do you have a budget plan in place? Do you even know what your credit score is? Do you even understand how credit is impacted? I could tell, being in banking for over 8 years, I can tell exactly how a person will operate based off of their credit. I could tell if they just missed one payment because they got sick and were out of work for a month, but they brought it right back on the next 6, 7 payments. There's credibility in that. Where someone has made the effort of correcting their credit blemishes. That has an impact as well. I can see that. I can utilize that. I can say, okay, hey, this person, they had a hiccup in 2022 or 2019 when everything hit, when there was the pandemic, you name it, right? But you could also see when somebody doesn't know what they're doing. They get a credit card, run it all the way up and max it up. Did you know that if you max out a credit card and keep it maxed out and over its limit, it actually hurts your credit more than anything? Because it's showing the creditors as well as financial institutions that you cannot manage or budget. That's very important. We live in a society where it is broadcasted on a daily basis on how to spend the money, but not how to keep it, not how to manage it, not how to invest it. You could always go and look at different types of programs and stuff of that nature, but really, has someone actually explained it to you in a way that you can understand? Again, so make sure you think before you co-sign, because this can have an impact on you. If that person doesn't make a payment and your score dropped 100 points, you're going to have to take months for that to get back to the score that it was, up to a year, okay? Because statistics show, right, that one missed payment takes about 11 to 12 payments of on-time payments to get it back to where it was. Just one missed payment. Your score can drop 50 to 100 points. And you just put yourself on the line. What if you were trying to purchase a home? And this is even going for spouse. This is going for your spouse, your loved ones, your boyfriend, your girlfriend. I've seen it all the time in my extensive experience with lending, particularly loans, where a boyfriend or girlfriend, oh, I love you, we're gonna be together, I got you, I'm gonna take care of it, I need the vehicle, get back and forth to work so we can, be great. No. If you can't do it on your own, don't do it. Because at the end of the day, what if y'all break up? I've seen it plenty of times where they will purposely not make the payment just so they know that it messes up your credit. So now you can't go get a nice car. It doesn't matter how much money you have. That's what I want you to understand as well. It does not matter how much money you have. If you do not have the credibility to show that you can handle business when it comes to your loans, when it comes to your auto loan, when it comes to your mortgage, they're not going to talk to you. You can have so much in the bank, but if your score is hella low, it's not going to go down. So that's where you need to focus in more on how you can better your environment, better your financial situation, and co-signing can be a pit for you. Now, it's not saying that it's not possible. There are situations out there that, you can definitely manage a lot more. So let's say you want to co-sign for your child to go ahead and establish them to build their credit up as well. Perfectly reasonable, completely understandable. Okay, you're teaching them, you're showing them, you're acknowledging it, but you need to be able to make sure that you can check on those payments all the time. every month. You need to know what date that is, and you will contact that person every day on that date or every month on that date. Hey, you made the payment? If you can make sure that you're going to stay consistent, you can co-sign. It's not a problem. It's not saying you can't. That's what it's there for, because there is situations where someone hasn't had the opportunity to build their credit, or, they weren't educated correctly, or they had hiccups from a bad connection, but they managed all their other stuff right. Okay. Kind of like with John, like what we discussed earlier. So you can see that there's a big impact on how it can affect you. But at the same time, okay, you have to be smart about what you're doing. If you're going to co-sign for somebody, you need to make sure that you're going to be able to handle the payment if they don't. You need to be ready to make that payment as soon as they say, hey, because again, they're not going to come and talk to you. See, that's what the thing about it is. You have to have a monitoring system so that way you can monitor what's going on in case that you do. Because if you don't, again, Amy's not going to tell John that, hey, man, I've been out of work 3 months. I missed 2 payments. I'm sorry. What you want me to do? I ain't got the money. You just set me back a few years because you ain't got the money when you could have easily called me and asked me for it. Because I agreed to sign on it. I have it set to the side. Do you? I remember first coming into credit. This is when I knew something wasn't right. It was my first time purchasing a vehicle by myself. Okay. I used to, always get those right off the, mom and pop shops, high interest rates, what have you. Right. Well, one day, I was trying to trade in the vehicle I had because it was, starting to have a lot of mechanical issues, and I was still making payments on it. So I was hoping I could trade it in. And I remember the dealership, just so they can hurry up and make a deal. And because I was illiterate and didn't understand credit at that time, okay, they said, hey, don't make your payments. It'll come off in 7 years. Your score will drop a little bit, but we can at least get you the vehicle that you need now. I remember I was like, something didn't feel right. Of course, I listen to my intuition 1,000%, but some people don't. So I was like, no, gut feeling was like, how, don't do it. So I called the car company that I currently have the vehicle with. And I said, hey, what happens if I stop making payments on this loan? They said, oh, your credit will be ruined. And we can repo it. We can come and get it. Your score will drop, to such and such amount. And I remember I went back to the salesman and I said, no, I don't want this deal. If it's going to ruin my credit, then it's not for me. I hope you guys have a good day. Now, they made sure to figure out a way to get me the vehicle. Granted, I had to pay a big chunk of the negative equity, okay, that was involved because, again, mom and pop shops, I wasn't educated. I didn't know how things operated. And so this is just kind of letting you be aware of how that realistic situation is that could apply to you. I didn't know, right? But had I listened to them, I would have been even in a worse situation. But they called me the next day. They said, hey, we figured it out. We did this. We took this. This is how much is going to be involved extra, and this is how much your monthly payment is. So because I was real interested and I didn't mind managing the payments because I, made sure to incorporate that within my budget, right? So I was like, okay, if I can afford this, and I have something that's very dependable, it takes me from point A to point B, I don't mind investing in that. The 2 major things that you do need to invest in is mortgages, your home, where you need to stay, where you need to sleep, where you need to eat, right? Your mortgage and your car. Your car has to take you back and forth to work. It has to take you back and forth to the store to go eat. Granted, it's $5,000 right now to go into the store, but whatever. You know what I'm saying? Just walking in that sucker, it takes a lot of money. But we're here, right? So again, this is just a quick segment on credit, okay? I want to try and promote more of these because it's very important to understand your credit. I see it all the time, man, where there's people that have potential or they were just not led the right way. Right? But if you can get a grasp on it now, you can make a lot of difference later. This isn't oh, we're going to fix it in 2 seconds. Let's be real. Okay. Be honest with yourself. Okay. You can't fix it in 2 seconds. But what you can do, okay, is become educated in the matter, know how to manage it, and move forward. This is where you're taking those necessary steps to build where you want to be. Where do you want to be? Where do you want to be? Do you want to still stay in the hood? Or do you want to move somewhere that's nice, safe for your children, right? Example, okay? It's not saying that it's going to be guaranteed. No, you have to put in work. You have to put in work. You have to know what you're doing. So that way you don't make those mistakes. You know what I'm saying? You could easily, say, hey, okay, I don't mind co-signing for my child. We're going to get a little beat up, but you ain't getting no bougie, nothing. Okay? No, nothing bougie. Okay, let me go ahead and shut it down. You're going to get this hoopty, okay, because it's less than $10,000 and we can both afford the $200 payment in case you don't got it. But you have to tell me, because I'm going to check it every month. I'm going to call you every month. You have to tell me if you don't have it. So that way I can jump on the matter and handle the situation so it doesn't impact me in the long run, right? So again, welcome. I'm going to be doing more of these, so definitely check me out, or, subscribe or add, whatever you want to do, so that way, you can be more informed. So I appreciate you being here, and make sure you think before you co-sign, okay? All right, bye.